Yesterday, we had some good news on oil in the Strait of Hormuz and Iran, and that helped mortgage rates. Actually, mortgage rates were down almost 1/8% yesterday. Rates right now, yes, they're starting the day at 6.44. So let's go over, and I'm going to show you the correlation between mortgage rates, oil, and then we're also going to look at some of the breaking news out today, like the jobs report and the things that Federal Reserve monitors. So first thing I like to do is I like to start my day with the chart. So if we start with the chart, we have the MBS market. This is what I follow each day as a mortgage advisor, and I'll explain it to you in a second, but all you have to understand is that number up through there. If that number's green, that's good news. That means mortgage rates are coming down. So what this is the price of a bond. It's a mortgage bond. So the yield on this thing is the biggest percentage of your mortgage rate. So as the price of the bond goes up, mortgage rates come down. Okay, so let me show you a correlation. The war started about 3 months ago, lasted a lot longer than I thought. But if you look at this, we had mortgage bonds all the way up here. Remember I said the higher the price, the lower the rate. Well, this is when mortgage rates were about 5.99. Okay, then the bond market just crashed because of the Iranian war. As oil prices go up, that's inflationary. Okay, as inflation goes up, the markets don't like it, especially bonds. So they go down, 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 down. As this goes down, yields or rates go up. So now we started our descent back up. How high is this going to go? Well, if we look at a 2-day chart, it's pretty good. We got a gap here. So the trend is going up. So what should you do if you're a homeowner right now? Should you refinance now? Specifically, what should you do if you're looking to buy? Are rates going to continue to come down? Should you hold off? I'm going to tell you that here in a second. But let's break down the economic news we have for today, because we also have to look at the fundamentals. Because the markets look at a few things. They look at oil on the inflationary front. Then they look at the jobs numbers and the jobs report and wage growth and the growth of the country. So we got a lot of these pieces of the puzzle today. So we had initial jobless claims come in today. Last reading was 190,000. It went up to 200,000. Well, it was less than economists expected, and I'm going to give this a thumbs up. It's kind of in line. But the good news is continued claims. See up through here, continued claims was 1.77 previously. And it was supposed to spike up to 1.8. It actually dropped a little bit to 1.76. Staying under 1.8 million is a fantastic feat. Then you go down through here, unit labor costs. How much are corporations spending on unit labor costs? Well, it actually went down from 4.6 to 2.3. It went in half. So automation's helping out quite a bit. So that's what's driving down the cost here. So let's get over and see, okay, we have costs coming down. We have a pretty good labor market, and we have oil coming down that's helping on the inflation front.